Getting a profit and loss account and no plan is like having a blood test without a doctor. You just wouldn't do it. So our one client earned 96,000 extra additional profit and increased their cash flow by 63,000. All by looking at the numbers and coaching them without just the feelings. Hi, I'm Michael from MDH. We help business owners that turn over more than £500,000 take the guesswork out of their business, build their profit, improve their cash, and build overall wealth. If this sounds of interest, subscribe now. If you find that you're running out of cash in your business, you are not leading it, you are winging it. You may be managing your business via your profit and loss account, and you may have some really cool things going on with around sales and marketing. But if you are running out of cash and you're not preparing for it, you are running your business on hope, which is never a strategy. So Hannah, which is not a real name, that has a home servicing company local to us, turns over £920,000, built from scratch. Hannah is massively proud of everything that she's doing. And sometimes cash is fine and sometimes it's not. And when it's not, it causes a massive amount of stress. So she had an accountant sending her reports, but she had no idea on what to do with them and where to go next on taking the best actions that would help elevate her business and get out of this cash flow hole that she found herself repeating in various cycles. What we changed in 21 days. Now, sometimes when you look 12 months ahead, a year can feel like a really long time. And if you've got customers that maybe one off or you won't use them repeatedly every single month, it can feel a little bit challenging. So what was really important for Hannah was to basically have a pipeline of customers to see what was cooking and ready to drop into income and what was happening currently in her business at the minute. Because it's really easy to smash pipeline, get it really big, concentrate on doing the work, but you then forget to do the pipeline and then you run out of income at the same time. Have you been in this situation? So what we did was we made sure we had just as much concentration on the income being executed as well as the pipeline, making sure new income was dropping over the line. And we built that into a cash flow forecast as well. And yes, we included corporation tax provisions, putting aside money for VAT and knowing what that was, as well as PAY at the same time. So we made sure over that period, we really nailed down in their numbers so we knew exactly what was coming and it wasn't just based on hope. Where there's a lot of new customers coming to the business, the acquisition structure was basically a lot of online ads. So you could see through the online ads there was genuine business coming through the door. But when you actually broke it down into different streams where they were coming from, there were two that were completely rubbish. So overall, her customer acquisition cost looked fairly solid. You could see that there was two of them that were just not performing. They had a decent chunky amount of ad spend on them, and by turning them off, actually created more profitability for the company because it wasn't producing a return on investment. So in her business, you always, and any other business as well, is okay, I'm going to spend money on online ads or doing whatever sales and marketing that I need to do. Okay, what does it return? Now, sometimes it won't be an instant, yeah, I've got a customer now. They could come over a longer period, and that depends on the business. But by having a real good understanding and going under the bonnet to see exactly what it was, we chopped two of our online advertising down in a heartbeat, and you got it, yeah, we spent more on the others. Pricing is really difficult today because we've gone through some massive amount of inflation. We've gone through some crazy times since COVID, and it can be a bit tough. Everything's gone skyrocketed through the roof and people are feeling a pinch and a little bit nervous. But what you need to make sure that you're doing is with all of your services is communicating the value, and making that value so to a point of where it almost can become a no-brainer for your customers to do it. And look at basically more higher value ones that you can upsell. How do you make this more VIP? How do you make this more valuable? How do you make it more valuable to the customer? And you come up with lots of things. So we came up with a product mix where we looked at adding 2 more extra services and also doubling down on the ones that really went well to then increase her business. We then put them into a bundle, which then increased more sales, which took up your transaction value. And then we look at bundle them in, which gave it a small little discount. So the end customer thought that they were getting a good deal. Good deal from the customer feels they're getting a good deal and they value your service. Happy days, because you'll hopefully get more repeat business and testimonials from them at the same time. And this is exactly what we did with Hannah's business. Accountability. It's all very well and good setting up anything for the first time and you build it so it gets to the top level. And what do a lot of people do? They stop doing what actually got them to really successful and go back to old habits, and the old results come with it. So make sure that you've either given yourself your own accountability, or you've got other accountability where you're checking in either on a quarterly or a monthly basis. It will have a massive impact on you and your business. Now, what were the results? Customer acquisition cost was down by 29%. Debtor days fell significantly. Profit for this business for Hannah for this year went up by £96,000. 96 grand. She's in a position now where she's looking at buying a long-term family, what some people define as a forever home. And with that additional profit, that will allow her to buy her the home of her dreams. So that means her husband and her children can live in there, absolutely enjoy it, and it's just by tweaking what she had already. We didn't turn water into wine, we didn't do anything different. All we did was concentrate on key bits that would then free up more money. So customer acquisition costs down significantly, debtor days down significantly, cash up by 80,000, profit up by 96,000. This is an out and out win. And now Hannah has got a platform to then build her business even further, where she can earn more money and deliver more value, increase her overall exit value of her business tremendously by concentrating on these main key things. What did we do? Step one, we built a proper forecast. So we came up with a strategic plan that we understood where all of our income and all of our expenses were coming from to get an overall value map. We then turned that into a full-blown forecast. A full-blown forecast for me is where you have a profit and loss, cash flow and balance sheet, and it also allows for funding proposals, whether you've got funding, invoice discounting, blah, 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 blah. So there was a complete three-way forecast where we measure that forecast to actuals. When you're looking at budgeting to actuals, you can see what you got right, because sometimes some business owners get a little bit overexcited and they're shooting for growth that's just potentially out their reach. Not a bad thing, but again, you're choosing partly with that to be unhappy. And the second part is how well and is it showing other problems that come up as well. When you're fighting the fire yourself, you only see the good days and the bad days. You don't see the bit in the middle, which is if you really tweak that, can then either elevate or downgrade your business. Track return on investment, not vibe. So there is, with some online advertising, some of it you could generally put down to branding because you're building up an awareness, or your followers are going up, which is then going to be your total audience. I get it. But ultimately, if you're spending money on online ads, you want that to turn at some point into money, and you want it to be more than you're spending. So if your customer acquisition cost, you need to find out exactly where your customers come from. If you haven't got the tech, then just ask them and record it, so you can basically go back and measure that I spent this amount of money on Instagram, my customer acquisition cost is 30p, 20p, 10p, 5p, whatever it is. And then you want to basically see, right, of that spend, how much is that returning me? Because you may even get to a point of where you're making that much money and it's all coming into your cash, it's all coming on your bottom line, and it's sitting healthy on your balance sheet. You may want to double down and do more. So make sure it's not just on vibes where it feels good. It needs to be actually walking the walk, and that's in physical results. Cash discipline. That when you're invoicing the clients, you need to be doing it as quickly as possible. Ideally up front, if not on day zero, but not leaving it 2 or 3 weeks, knowing that it's all right, they'll pay you in the end, because you are just locking up money unnecessarily. You also need to make sure that you've got discipline where you're taking out a standard amount of money per month out of your business. You're not being willy-nilly where you're putting random holidays on credit cards. You're putting cars through, or you're going entertaining, blah, blah, everything that a director can spend on having fun, which is okay, but you need to have it a level of consistency without pure chaos, or done on a whim, or done on a feeling because you feel rubbish. And keep an eye on your tax. Make sure that you're keeping up to date with your VAT, make sure you're keeping up with your PAYE, make sure you're keeping up to date with your corporation tax, and make sure these are all factored in your payment. It's very easy when you're just looking at a profit and loss account just to completely ignore that and look at your bank account. I get it, loads of business owners do that, but ultimately you want to be making sure that it's earmarked so you don't get them horrible, nasty surprises on the deadline when it is due. Step 5 is your accountability and your coaching. Whoever it is, whether your uncle, mother, sister, brother, whether it's us, whether it's a business coach, whoever it is, make sure someone around you that you've given full permission to give you accountability for, because the more accountability to have for your results, the better they will be. Coaching sounds like meetings, and that may be an hour or 2 that I'll never get back in my life. It could be. But these meetings are just looking at you and your business. They're looking at what drives it and how to make it better, so you can bring up the value of your business and make more money. My market won't accept higher prices. Oh, it's too tough out there. It's very competitive. Okay, well, why don't you actually turn on its head and price for the value you actually deliver? Every small business needs help in translating the numbers, and that's what we do. So if you're looking to turn your numbers confusion into actual tangible actions, which then lead to profit, I'm Michael from MDH. We help business owners just like you. Click subscribe to make sure that you see all of our future videos.